What is up everyone and welcome to today's video. We're going to go over why I spend as much as I can on my credit card. But before we do that, let's just look at a few statistics regarding credit cards to sort of get a better idea of where we're coming from. Here in Canada, we have $80 billion of credit card debt. We transact about 5,700 times per minute. About 50% of the people do not pay off their credit card balances at the end of every month, and we have on average $3,000 to $4,000 of credit card debt per person. Now obviously when we talk about averages, we have to take into account that, say, 50% of the population pays off their balance at the end of every month and the other 50% does not. So if on average the whole population has $3,000 to $4,000 of debt per person per credit card, or not per credit card but per person, well, if we only take into account those that do not pay off their balances in full, we're probably looking at a number closer to $7,000 or $8,000 of credit card debt per person. Now, if we look south across the border to the States and we look at what's going on with their credit cards there's about 10 times more credit card debt because the population is about 10 times greater than the population of Canada. We're looking at $830 billion of credit card debt. The average debt per person is about $5,700, and about 40% of the people do not pay off their credit card at the end of every month. Now, what makes this statistic so significant when we're talking about people not paying off their credit card debt? Well, it's quite simple. Credit cards charge approximately on average 20% interest per year. So if you spend $1,000 in 1 month, you pay off nothing, well, you are going to be charged $1,000 times 20% divided by 12. That's the approximate way to calculate the amount of interest you'll be charged. You're going to take your balance of $1,000, add the 20% and divide it, by the 12 months of the year to get how much interest you're going to pay per month. That's a lot of interest. It's very hard to find an investment that would actually yield 20% per year for multiple years without taking on an insane amount of risk. So that's one reason why. It's because this sort of debt that we hold on credit cards is so expensive that a lot of people try to shy away from credit cards. And the reason why is because on credit cards, it's very easy for you to spend money that you don't have. If you have a credit card that has, say, a $5,000 limit, well, you can spend the $5,000 regardless how much you have in your bank account. On the other hand, if you use a debit card, which is directly linked to your bank account, if you have $100 in your account, you can only spend up to $100. There's no way for you to spend over that unless you have something like overdraft protection on your checking account, which will allow you to spend, say, an extra $300 or an extra $1,000 of money that you don't have, but then you owe the bank that money. Again, the interest rate on overdraft protection is less than on the credit card. So this may be a more viable option if you really are shortchanged. But in most cases, spending more than what you can afford on a credit card is very dangerous, because that's when you start accumulating those credit card balances. And if you're unable to pay your credit card balance for, say, 3 months, 4 months, you just keep accumulating the interest on the interest over that period of time, and it also ruins your credit score. So that's why the industry, a lot of people try to shy away from credit cards because it makes it so easy to spend and so easy to get into debt. And the last thing before I start talking about why I love credit cards, or why I try to spend as much as I can despite the sort of negative connotation that the credit card has, is the average balance kept by people depending on their income brackets. So this chart that you see on the screen shows that if you earn less than $25,000, your average debt is going to be about $3,000. This is in the States. If you're a high income earner, so say $160,000 and more, you will carry the highest amount of credit card debt. So more money, more credit card debt? I guess so. So for all of you out there with credit card debt, making more money, yes, it may help you alleviate the debt in short term, but in the long term, based on what we can see with these statistics, the opposite may be true. Now, in my case, I have one primary credit card that I use. It's a cashback card because I believe in cashback. I don't like to try to understand how to convert travel points into dollars, or if I want to book a trip using a travel card, I have to fit all these criteria, fly on certain airlines, use certain hotel bookings. I don't really want to try to understand that. It's much easier for me to just put the cash back in my pocket or have the cash pay off my next credit card statement partially. That to me makes more sense. So I use the Scotiabank Momentum Visa card. If you are not in Canada, unfortunately, you do not have access to this card, but I'm sure in the States you have a lot of great cards. I can do a video later on outlining the best and or the worst cards that I was able to find. But my card, generally speaking, it gives me 4% on gas and groceries, it gives me 2% on pharmacy and recurring payments, and 1% on the rest. There may be a few categories that I missed out, but just to understand sort of how the card works, that's what it is. So there was also a promotional first 3 month 10% bonus offer. So for the first 3 months up to $200 cash back, I would get 10% on my money spent. So for every $1,000 I spend, I would get 100 back, up to 200. With the promotional offer in mind, the amount of cash back that I was able to make in the past 6 to 8 months is about $330, which is huge. And you must be thinking, how did you spend so much money? Well, a lot of it was that promotional offer, but again, I have a few side projects that I run that require me to spend money in order to make the money, like buying product and selling product while I spend money on the credit card, and I try to put as much as I can on that credit card to make as much cash back as possible. So that's one of the reasons. And I never use my debit card and I never use cash because I'm able to accumulate these sort of cash back points or just this cash back, but I always pay off my credit card balance at the end of the month, and that's key. Because if you don't pay off your credit card balance, what I'm about to say next will make absolutely no sense for you to even try, because the interest that the credit card companies charge you is very high. And you may be thinking, well, there exists low interest rate credit cards, maybe 7 to 11% usually. Well, they don't offer cash back because that credit card usually is, like, the main feature of that card is the low interest rate. They don't usually combine low interest rate cards and cash back. And if they do, the cash that you're going to get back is going to be lower than competing pure cashback cards. So I'm going to tell you why I also like credit cards. Just humor me for a little bit because it may take a little while to explain, but I'm going to get my point across, I'm sure. Let's say you spend $1,000 per month. And you spend, and your credit card statement starts on the 1st of the month and ends on the 30th or the 31st of the month. So beginning of the month is when your credit card statement starts and end of the month is when it ends. And all of your spending will be done in the middle of the month. So on day 15, and you spend $1,000 per month. So $1,000 per month spent in the middle of the month every month. So when it comes to credit cards, if you spend it in the middle of the month, that means that there are going to be 2 weeks remaining in that statement period, and then there's a grace period of 3 weeks. And in this grace period, you don't have to pay off the card, meaning you have 3 weeks to pay off your credit card after the end of the grace period. So you have 5 weeks that you can delay the payment that you initially made on the 15th of that month. Now, if you take this $1,000 that you just spent that initially you would have to pay off directly on a debit card, and you invest it in a saving account that yields 2%. So we're not talking about super high-end saving accounts at small banks that you may find online, but we're also not talking about, in Canada, the big 6 banks offering you 1.25%. We're trying to get the middle between the 1% and the 3-4% that you may find as promotional offers. So at 2% per year on the $1,000 for 5 weeks. So you invest the $1,000 for 5 weeks. At the end of that, you're going to get $1.90. Now, yes, I know $1.90 seems like nothing. It's practically pennies. It's 190 pennies. But it's 100% free money because you spent the money, you kept the money for 5 weeks, and then you paid the money back. And a lot of companies run their businesses like that. They incur an expense and they try to delay the payment as long as possible because they have their money working for them in their business accounts. So either paying salaries or investing in new equipment or investing in actual investments. So real estate, stocks, bonds, or a saving account, having the cash sit in a saving account. They would generate money. Now, if you see your personal finances in the same way that a business manages its cash flow, you can also make money in the way that I said. And yes, $1.90 is pennies, but that's only on $1,000 spent at 2%, right? Now, if you also take into account the 1% cash back, I'm just using a very conservative estimate here, of money that you would get after spending that $1,000, you would get a total of $10, right? So we're looking at $11.90 because $1.90 plus 10 is $11.90. And if you do this every month and you invest this money in the stock market at a conservative 8% return, we're not talking about 12% like Dave Ramsey would say. We're talking about a conservative 8%, so you can easily make that in an index fund on average over the next 10 years if the market performs as it did over the past 50 years or so, right? If you did that for 40 years, investing the $11.90 every month in some stock market index, you would end up with, drum roll please, about $42,000, almost $42,000 at the end of 40 years. Now, obviously, you're not going to retire on $42,000, but unfortunately, $42,000 is a little more than a lot of people actually end up having in their retirement. So just by doing that, you're a little bit ahead. And if you combine this with saving in your RSPs or your tax-free saving account, or in the States, your 401k or your Roth IRA, you're going to have a lot more money, obviously. But this is just a simple illustration of what spending $1,000 on a cashback card can do for you. On another note, if you were to take that same $1.90 and invest it in the stock market, yes, it's much riskier because you're taking the $1,000 that you'll have to pay in 5 weeks and you're putting it in a risky investment. So if the stocks go down, you lose money and then you can't pay the credit card off. But just hypothetically, if you were to place this $1,000 in an investment that would yield 8%, you would end up with a total of $7.70 at the end of that 5-week period. So if you add that $7.70 to the $10 that you make and then you invest that at 8%, you will get even more money than the guaranteed, well, not guaranteed $41,000, but if you invest your 5-week $1,000 at 2%, it's guaranteed return. So you're going to make significantly more money over the 40 years, but the risk is much higher. And I'm not telling you how to take on more risk to risk not be able to pay off your credit card. I'm just telling you, hey, there's a way to make some free money by using a credit card. And even more so by using a cashback card, or you can use a travel card and use your points towards a plane ticket or a hotel room, not a problem, but cashback is just easier for calculations. I also have a second credit card, and just to illustrate the power of cashback, I'm 24 right now. I got the card maybe 2 or 3 years ago, and I've accumulated a total of $834 cash back. This was on the Tangerine MasterCard, which used to be much better when they initially released it. Now they sort of lowered the overall cash back that you get, but initially it was very good, and I was able to accumulate $830. Yes, I did spend a lot of money on the card, but I was able to save a little bit by spending on a credit card that had I spent on a debit card, I would have never saved. Now this may seem like a lengthy video on why I spend as much as I can on credit cards, but there aren't very many people who sort of break down the whole investing the free money for 5-week process. And yes, we're not talking about thousands of dollars here, but for some people it can make a difference, especially if you spend a lot on your credit cards. Finally, the last benefit that most people know about is the credit cards usually come with some advantages or some perks, usually the ones that you have to pay for. So if there's an annual fee of $100 per year, obviously it's not ideal, but if you use the perks a lot, then maybe it's worth it. For example, travel insurance, lost baggage insurance, car rental insurance. So even you can get some medical insurance. These different perks will save you money if, say, you're going on a trip and you need to rent a car, you don't need to get insurance on that trip. If you are going on a trip and you need medical insurance and you don't have it covered by your employer, or you don't have a separate health plan, well, your credit card will cover the travel insurance up to, I believe, 2 weeks. All credit cards are different, but just check what the conditions are in that card. So overall, these are the reasons why I like spending, or I try to spend as much as possible on my credit card. It's to save money, cash back, to sort of enjoy this 5-week grace period. And usually, if I'm traveling or if I'm renting a car, I don't have to get medical insurance, I don't have to get car insurance, and I get to save a little bit more money, making that $100 fee or $120 fee worthwhile for me. Thanks guys for tuning in. Hope you learned something. If you're wondering what other content we have, well, we also have a podcast on SoundCloud called Personal Finance Boss, where we talk about different financial investments, different financial vehicles, different personal finance tips and tricks that we've learned over the years, and it's a great place to start your financial journey. Thanks for tuning in, and see you guys in the next one.